Guys, I just added a new Dividend stock to my portfolio, and I know, it all just happened so fast. But I want to tell you all about this new stock and why I bought it in today's video. So without further ado, let's get into it. Alright guys, so before I make the big reveal, just a quick little backstory on how this stock ended up in my portfolio. I actually talked about it in this video right here and ended up adding it to my watch list for further research. And then in this video right over here, Russ and I were talking about the stock and how I was thinking about adding it to my portfolio when my friend Mountain High 80 surprised me with a very generous super chat to go and start a new position in the stock. So as I'm sure you can imagine, I couldn't let him down. And although I hadn't completely finished all of my due diligence on the stock yet, I had to pull the trigger from my guy Mountain High, and I ended up adding, you guys ready for it? Kilroy Realty Corporation, ticker symbol KRC. So what I did, guys, is I ended up investing the super chat donation from Mountain High 80 to buy 1 share of KRC, and then I upped the ante a little bit and picked up 2 additional shares, bringing my total number of shares so far with this new position to a whole crowd, 3 shares of KRC. And as you can see, I mean, my position's not off to that great of a start. My average cost per share is $53.10, and I'm down just over 4% in a handful of days, but you guys know how it goes. We're in it for the long term, so this drop today is not that big of a deal. But anyway, guys, I bought these 3 shares and then I invested the rest of my weekly, $150 contribution into a different dividend stock, which we'll talk more about later in the video when we get to the portfolio update. But for now, I want to tell you a little bit more about Kilroy Realty Corporation. So this company is a real estate investment trust with a portfolio of properties spanning over 14 million square feet, a lot of square footage, in 5 different very populated regions across the country, including the San Francisco Bay Area, Los Angeles, San Diego, the Pacific Northwest, like areas up in Seattle, and Austin, Texas. Most of the properties they own are for office and retail use, and some of their major tenants include companies like Amazon, Microsoft, and Adobe, but they also have a handful of residential properties in their portfolio, so it does add some diversification there. And they've also expanded into acquiring life sciences buildings like Oyster Point, pictured right here, located in South San Francisco, which they say is setting a new benchmark for workplaces in the industry. Now, switching gears and getting into some of the numbers behind KRC, I mean, pretty much across all time periods, they're seeing negative share price performance. Starting here with the year to date, they're down 25.75%. In the last 6 months, they're down even more, 27.5%. And even just in the last 30 days, they're still seeing some red, down about 3.25%. And furthermore, if we zoom out across a longer period of time, looking at the last 5 years, they are still down quite considerably, 26.5%. With the peak, the highest share price they reached was about, just under $90 per share before the pandemic started. Then it came down to a low of $49.60, which really, guys, is not too far off from where this company is currently priced at, which is $50.77, as you can see there in the top left. And with all of this red in the share price performance, the valuation is really not looking too bad as well. If we go over to the valuation page and scroll down all the way to the bottom, the P to AFFO is 14.72, which is about 15.5% lower than the sector median. So compared to some of the other real estate investment trusts, KRC does appear to be at a better valuation just based on this metric. And the same is true with the P to FFO, which is about 28% lower than the sector median. So that does hint at some affordability with KRC right now, and I feel really good about starting a position where the stock is currently priced, especially considering how much growth this company is still seeing. If we go over to the financials page right here, all across the board over the last 10 years, this company has managed to increase their revenue every single year. And I mean, we can see this chart right here. If we zoom in, it's doing nothing but going straight up and to the right. And they didn't even skip a beat in 2020 with COVID. They still managed to increase their revenue. It's like the pandemic didn't even happen for KRC, which is awesome because during this time, as you guys know, there was a lot of disruption going on in the office space, which makes up a big chunk of KRC's portfolio of real estate. But like I said, it didn't even affect them. They still managed to continue their growth on the top line. And the same is true on the bottom line. If we scroll down, taking a look at the adjusted funds from operation, the AFFO, we could see that also in 2020, they managed to increase the bottom line, which is fantastic, especially when we compare these two numbers, the total revenues and the adjusted funds from operation to, let's say another real estate investment trust like Simon Property Group, SPG, which took a major dip in 2020, both on the top line, as you can see right here, and also on the bottom line, that adjusted funds from operation, they took a loss as well. So number one, it's good to see KRC being so resilient in times of turbulence. And number two, it's just good in general to see a company like this experiencing very consistent growth. Across all 10 years, they're doing nothing but putting up better numbers than the years before. And before we move on and dive deeper into the dividend stats, we do need to talk about this very important important metric right here, the FFO payout ratio, which essentially is the percentage of funds from operation that they're paying to the dividend. And I'm so happy to see KRC's where it's at, pretty consistently, like hovering around 50%, which to me suggests that it should allow them to be able to continue paying and most definitely growing the dividend, and also gives them plenty of opportunity to use the rest of the funds to, continue making acquisitions, which then furthers the growth of the business, which then hopefully results in an even continually growing bottom line, which hopefully results in more dividend growth. It's just a vicious cycle. Now, moving on and diving deeper into the dividend stats, guys, we can see that the starting yield's not too shabby at all, just above 4%, so that's really nice. The payout ratio, we're not going to pay attention to that. This is a little bit different with real estate investment trusts. We're really going by the FFO payout ratio, which we saw. The 5-year growth rate is sitting at just above 6%, so, it's not knocking it out of the park as far as dividend growth goes, but it's also not nothing. 6% is not too bad. And then they have a dividend growth history of 6 consecutive years. Now, if we go over to this dividend history page right here, we can see that they've been making consistent dividend payments for the last 24 years. So it's a really solid track record of making dividend payments. If we zoom out, look at this max chart right here, we can see that there was a period of time, kind of a lull period between, like 2009 and I guess 2016 when they weren't growing the dividend, but they've been growing it pretty steadily ever since. Now, I'm sure this goes without saying, no dividend stock is perfect, and KRC is definitely no exception to that. I mean, they certainly have some potential headwinds. There's certainly some potential risks. Probably one of the most obvious risks, especially in the office real estate space, is if companies decide to really adopt permanent work from home policies on a widespread level. And across the last couple of years, we've seen more of an adoption of work from home take place for some companies, and more specifically certain positions within these companies. And I do think it's true there are some jobs that you don't need to go into the office to do. I do think that doesn't apply all across the board, and there's some times where employees really do benefit just from being around their coworkers and being physically around other people. It's just a different energy, and personally, I think it's more effective to have meetings in person, just being around each other versus on Zoom where, 50% of the people are secretly just doing this anyway, not really paying attention. And it seems to me that many employers are kind of coming around at the same train of thought and are calling their staff back to the office to work in person at least a few days a week in what is being called the Great Return. And because of this, guys, global office leasing volumes, as you can see, has been trending up, which is a really good sign for companies like Kilroy. And with that, now I want to hear from you guys. What was the most recent stock you added to your portfolio? What is your newest position? Let me know in the comments below. I'd be curious to hear about it. All right, guys, now moving on and getting into the weekly portfolio update, I would say overall it was a really good week for me. As you can see right here, my portfolio is currently valued at $39,417.81, which is about a $325 jump compared to this time last week. And furthermore, there was one point throughout the week, guys, where my portfolio touched over $40,000, which is a pretty cool milestone. It's the first time I've ever seen that. It was definitely an all-time high for this portfolio, but it's since come down a few $100s since then, and we'll get back up there, no doubt. The total unrealized gain in this portfolio is about the same as last week, 6.38% compared to last week's 6.39%, but the total gain in dollars was up just a little bit, up about 15 bucks. And my annual dividend income saw a really nice jump too in the last week, currently sitting at $1,755, which means, guys, we are less than $250 away from hitting that $2,000 milestone. So close, it's coming up quick. But anyway, guys, this represents about a $10 increase compared to this time last week. So we're making progress, guys, baby steps forward. That's what it's all about, day by day, week by week. Now, as far as my purchases go, you already know I picked up 3 shares of KRC, and I spent about $160 to do that. And I also invested $150 into Procter & Gamble, which was kind of a random purchase, I guess. I just had a wild hair to pick up a share, which brings my total contributions for the week, or my total purchases, because some of this was with dividend income money that came in, but my total purchases, $309.30 for the week. Anyway, guys, if you want to learn about some more awesome dividend stocks to invest in, then check out this video right over here where I tell you about 4 real estate investment trusts, including KRC, but KRC and 3 others that are just looking really cheap and really good pickups right now. So click right over here, and I'll see you in the next one.